Welcome back to Stocks Telegraph, your go-to source for in-depth stock analysis and financial insights. Today, we're diving into one of the most talked about names in the renewable energy sector, NextEra Energy, Incorporated, trading under the ticker NEE. NextEra has been making waves with its strong commitment to clean energy and impressive financial performance. But what's the real story behind its stock movement? Is NEE a strong buy, or are there risks that investors need to be aware of? Stick around as we break down the latest financial updates, examine the company's growth potential, and explore how NextEra Energy is positioning itself in the evolving energy market. Before we dive into the details, be sure to give this video a thumbs up, subscribe to the channel for more updates, and share your thoughts in the comments section below. And hey, if you know someone who'd benefit from this info, don't hesitate to send them this video. Let's get started. Let's kick things off with a closer look at NextEra Energy's stock performance. As of today, NEE is trading at around $76.97, with analysts giving it an average target price of $88.28, suggesting there's still upside potential for the stock. In fact, when it comes to analyst sentiment, NextEra holds a solid 1.88 rating on the scale from 1 strong buy to 5 sell, indicating a moderate buy consensus. And the stock has been outperforming the market this year with a solid 26.72% year-to-date performance. Despite this strong performance, NextEra Energy is currently about 10.6% off its 52-week high, which shows there could be room for growth if market conditions remain favorable. NextEra Energy's financials are also looking pretty solid. For example, the company's return on equity stands at 14.31%, and it maintains a healthy profit margin of 29.38%. Looking at earnings, NextEra posted a solid 7.93% EPS growth this year, and it's expected to see another 7.81% growth next year, which is great news for long-term investors. Plus, sales growth is sitting at 4.58%. with 50.06% quarterly earnings growth year over year. So, is NextEra Energy a stock worth buying right now? The numbers certainly suggest there's potential for both short-term gains and long-term growth in the renewable energy space. But let's dive into some of the more strategic moves that could impact the stock going forward. Recently, NextEra Energy made headlines with a significant capital raise, selling $1.5 billion worth of equity units to major financial institutions like JP Morgan, Mizuho, and Goldman Sachs. Of the $1.5 billion, $1.45 billion will go into NextEra's general funds for investments in energy and power projects, along with general corporate purposes, like paying down commercial paper obligations. This move strengthens NextEra's financial flexibility, allowing it to expand its renewable energy projects and stay ahead in the green energy race. The funds will also help the company tap into new growth opportunities in this rapidly growing sector. Now, let's take a closer look at NextEra's third quarter 2024 earnings, which were nothing short of impressive. On a GAAP basis, the company reported net income of $1.852 billion, or $0.90 per share, a significant increase from $1.219 billion, or $0.60 per share last year. Even more impressive, when adjusted, earnings were $2.127 billion, or $1.03 per share, compared to $1.920 billion, or $0.94 per share in third quarter 2023. This growth is a testament to NextEra's operational efficiency and market position. The standout performer for the quarter was NextEra Energy Resources, which saw a massive turnaround, earning $1.223 billion, or $0.59 per share, compared to a loss of $230 million in the same quarter last year. And there's more. NextEra Energy Resources continues to expand its renewable energy portfolio, adding 3 gigawatts to its backlog for the second consecutive quarter. Now, the total backlog stands at a remarkable 24 gigawatts, reflecting its strong position in the renewable energy market. As for its long-term outlook, NextEra is projecting steady growth, with adjusted earnings per share expected to fall between $3.23 and $3.43 in 2024. For 2025, 2026, and 2027, adjusted EPS is expected to grow steadily, reaching between $3.45 to to $4.32 by 2027. Additionally, NextEra is committed to growing its dividend by around 10% per year through at least 2026, which is great news for income-focused investors. Now, let's not forget about the dividends. NextEra Energy just declared its latest quarterly dividend of $0.0515 per share, payable on December 16, 2024. Finally, analysts are bullish on NextEra's future. BMO Capital recently raised its price target for NextEra Energy from $83 to $91, maintaining an outperform rating. With analysts' median price target representing a 23% upside from current levels, there's a lot to be optimistic about. So, to wrap things up, NextEra Energy stands out not only as a leader in renewable energy, but also as a financially healthy company with strong growth prospects. With consistent earnings growth, an expanding renewable energy portfolio, and a solid dividend strategy, NEE looks well-positioned to benefit from the ongoing global energy transition. Is NextEra Energy a stock you'd add to your portfolio? Let us know your thoughts in the comments below. We love hearing from you. And if you found this analysis helpful, don't forget to like, subscribe, and share this video with anyone who might find it useful. Thanks for watching, and we'll see you in the next video with more stock analysis and financial updates. Happy investing!